Right now, while you're listening to this, the largest creditor in human history just walked away from the table. No drama, no announcement, just ... silence. And that silence, it's deafening. Think about this. For decades, China bought American debt like clockwork, trillions of dollars. Every month, like rent coming due, they'd show up and buy more. Then, in 2022, something changed. They stopped, not slowed down, stopped, and barely anyone noticed. Here's the part that should terrify you. This has happened before. Every single time a dominant empire's creditors vanish, the same pattern follows. Rome, Spain, Britain. The timeline changes, the names change, the ending always the same. So the question isn't why China stopped buying. The question is, what did they see that we're missing? To understand where we're headed, we need to go back. Not decades, centuries, because this isn't new. It's a cycle, and we're watching it replay in real time. History doesn't repeat, they say, but it rhymes. And right now, the rhyme is getting louder. Every empire that dominated global trade faced this exact moment. The moment when their creditors realized something. When the math stopped making sense. When trust began to crack. The pattern is documented, proven. You won't find this connection in textbooks because nobody wants to draw the line. From then to now. But the line is there, clear as day, and your grocery bill is writing the next chapter. Let me show you something. In 2013, China held $1.3 trillion in U.S. Treasury securities. By 2024, $775 billion. Source: U.S. Treasury International Capital System. 2024, they dumped $525 billion in American debt in 11 years. That's not a gradual shift. That's a strategic exit. But here's what they don't tell you. China isn't alone. Japan reduced holdings. Saudi Arabia scaled back. Foreign governments collectively decreased U.S. debt ownership from 34% to 24% since 2011. Source: Federal Reserve Economic Data, 2024, when your biggest customers stop buying your product. That's not a coincidence, that's a signal. Let me take you to Rome, 235 AD. Things were good, really good. The empire stretched from Britain to Egypt. Trade routes hummed with activity. Roman coins clinked in merchant hands across 3 continents. Gold and silver flowed into Rome like rivers. The empire felt invincible. Then came the military crisis. Constant wars on every border, and wars need money, lots of it. The government faced a choice: raise taxes and cause rebellion, or get creative. They chose to be creative. They started debasing the currency. The silver content in Roman coins dropped from 90% to 5% over 50 years. Source: The Coinage and History of the Roman Empire, Sutherland, Oxford Press, same coin, same face, just less actual silver inside. Merchants noticed first. Prices doubled, then tripled. Then nobody could predict what anything would cost tomorrow. A loaf of bread in the morning costs different from bread in the evening. Think about that. Imagine walking into a grocery store and prices change by the hour. Here's the part that matters. Rome's foreign trading partners saw what was happening. Persian merchants, Germanic tribes, Egyptian suppliers. They all watched Rome debase its currency and made the same calculation China made in 2022. They stopped accepting Roman currency, started demanding payment in goods or foreign coins. The empire's creditors walked away. Sound familiar? Your paycheck is printed, your rent goes up, your savings lose purchasing power. Different century, same mechanism. But here's what they didn't see coming. When your creditors leave, you can't borrow to pay your soldiers, can't maintain your borders, can't keep the roads safe. The empire that seemed permanent began to crack. By 284 AD, Rome split into 3 competing territories. 50 years of chaos, all because they thought they could print their way to prosperity. The empire that ruled the world for centuries learned a simple truth. You can fool your own citizens for a while, you cannot fool your creditors forever. This pattern didn't end with Rome. Fast forward to 1557. Spain, another empire convinced of its invincibility. Spanish galleons returned from the New World loaded with gold and silver. Tons of it, literally, between 1500 and 1650. 180 tons of gold and 16,000 tons of silver flooded into Spain. Source: The Spanish Empire, a historical encyclopedia, Sibley, ABC Clio. 2016, the wealth was staggering. Spain ruled half the known world. King Philip II spent it faster than it arrived. Wars in the Netherlands, wars with England, wars with France, wars everywhere. He borrowed from Italian and German banking families. The interest payments climbed, the debts mounted. Then came 1557. Philip II walked into court and made an announcement. Spain was defaulting on its debts. The treasury was empty, despite rooms full of gold. How? Because gold and silver aren't wealth, they're currency. And when you flood the market with currency, each unit becomes worth less. The creditors saw the pattern. Genoese bankers, German financiers, they started demanding higher interest rates. Some stopped lending entirely. By 1596, Philip II defaulted again, and again in 1607, and 1627, and 1647. 4 times in 90 years. Source: Sovereign Defaults in History. Das Papayonu Trebesh IMF Working Paper. 2012, each time Spain defaulted, its credibility died a little more. Each time, borrowing costs increased. The empire that conquered the Americas couldn't conquer basic mathematics. When your creditors lose faith, empires collapse from the inside. Here's your modern parallel. The U.S. national debt hit $35.9 trillion in October 2024. Source: U.S. Department of Treasury. October 2024, that's $270,000 per taxpayer. Interest payments on that debt reached $1.1 trillion annually. More than we spend on defense, more than we spend on Medicare. Just interest on borrowed money, and China stopped buying. Japan reduced holdings. Who's going to lend next? The cycle continued. Jump forward to 1931. Britain, the British pound, had been the world's reserve currency for a century. London was the financial center of the planet. British banks financed global trade. The empire spanned a quarter of the Earth's landmass. Then came the Great Depression. Britain tried to maintain the gold standard, the promise that pounds could be exchanged for gold at a fixed rate, but the promise became impossible. The Bank of England's gold reserves drained away. Foreign creditors saw the math. They knew Britain couldn't maintain the peg. They started converting pounds to gold faster than Britain could supply it. September 21, 1931, Britain abandoned the gold standard. The pound collapsed. Overnight, the world's most trusted currency lost 25% of its value. Source: The Gold Standard and the Great Depression. Eichengreen, Oxford University Press, 1992. Here's the human story. Margaret Thompson was a 62-year-old schoolteacher in Manchester. 40 years of savings. Every penny and pound sterling. She believed in the stability of the British Empire. Everyone did. When the pound collapsed, her retirement savings bought 25% less food, 25% less heating, 25% less of everything. She worked until she was 70, then died 3 years later, never fully recovering financially. That's what currency collapse does, not to governments, to you, to teachers, to retirees, to anyone who saved paper money. Believing the promise would hold, the pattern went unlearned. 65 years later, another currency crisis revealed the same truth. 1997, the Asian financial crisis. Thailand, Indonesia, South Korea, economies that seemed unstoppable. Growth rates of 8%, 10%, 12% annually. Foreign investment poured in. Everyone wanted exposure to the Asian miracle. But beneath the surface, something was breaking. Companies borrowed heavily in US dollars. Governments maintained fixed exchange rates they couldn't sustain. Foreign creditors, mostly Western banks, noticed the vulnerability first. They began pulling money out. Slowly at first, then all at once, July 2, 1997. Thailand floated the bath. The currency collapsed 50% in 6 months. Source: World Bank, East Asia Crisis Report. 1998, Indonesia's rupiah fell 80%. South Korea, the world's 11th largest economy, nearly went bankrupt. 21 million people fell into poverty across Southeast Asia in 18 months. Source: Asian Development Bank, Crisis Impact Assessment, 1999. Let that number sink in. 21 million families who had stable jobs, savings, futures. Then their currencies collapsed because foreign creditors walked away. Kim Min-soo was a factory manager in Seoul. Middle class, 2 kids in university. He saved his entire life in Korea. When the won collapsed, his savings lost 60% of their purchasing power in 4 months. His kids dropped out of school. He sold his house at a loss. Started driving a taxi at age 53. Different continent than Rome. Different century than Spain. Same pattern, same human cost. And here's the connection nobody wants to make. What happened when creditors lost confidence in those currencies? Exactly what's happening now as China exits U.S. treasuries. Notice something? The same 3 warning signs. Every single time. Sign 1. Massive debt accumulation. Rome borrowed to fund wars. Spain borrowed against future gold. Britain borrowed to maintain the empire. Asian countries borrowed in foreign currency. The U.S. borrowed $35.9 trillion. Sign 2. Currency debasement or monetary expansion. Rome reduced silver content. Spain flooded markets with New World gold. Britain printed pounds. Asian countries maintained unsustainable pegs. The U.S. increased money supply by 40% between 2020 and 2022. Source: Federal Reserve, M2 Money Stock, 2024. Sign 3 foreign creditors exit. Persian merchants refused Roman coins. Italian bankers stopped lending to Spain. Global investors fled the pound. Western banks pulled from Asia. China dumps U.S. treasuries. 3 signs. Same order, different empires. Same ending. But here's the twist nobody saw coming. Fast forward to 2008. The modern empire faces its test. September 15, 2008, Lehman Brothers collapsed. A 158-year-old investment bank vanished overnight. $639 billion in assets. Gone. Source: Lehman Brothers bankruptcy filing, 2008. The global financial system froze. Credit markets seized. Banks stopped trusting each other. The Federal Reserve made a choice. Print money, lots of it. $4.5 trillion through quantitative easing. Source: Federal Reserve balance sheet. 2008 to 2014, they called it monetary stimulus. History calls it currency debasement with better PR. And here's what happened next. China was watching. Every central bank was watching. They saw the playbook. When America faces a crisis, it prints. When debt gets too high, inflate it away. The dollar might be the world's reserve currency, but the pattern is timeless. China started their exit strategy, most slowly at first, few $100 billion here. Then accelerating. By 2022, the exit became obvious to anyone paying attention. Robert Chang was a pension fund manager in California. He managed retirement savings for 50,000 teachers. In 2008, he believed U.S. treasuries were the safest investment on earth. Everyone did. As interest rates dropped to near zero to combat the crisis, bond values rose. Everything seemed fine. But here's what Robert noticed in 2018 when he ran the long-term math. Treasury yields couldn't keep pace with real inflation. The official inflation rate is 2%. His grocery bills said 5%. His healthcare costs were 8%. The rent on his modest apartment rose 30% in 5 years. He realized the same thing China realized. Lending money to America at 2% interest, while real inflation runs at 5%, means losing money. Slowly, legally, but losing nonetheless. Robert reduced treasury holdings in his fund, moved to commodities, foreign assets, inflation-protected securities. His colleagues thought he was paranoid. China made the same move. Were they paranoid or pattern-aware? So what does this mean for you, for us, for right now, as of October 2024? That's $270,000 per taxpayer. Source: U.S. Treasury Department. The interest on that debt costs $1.1 trillion annually. Source: Congressional Budget Office, 2024 Budget Outlook. More than defense spending, more than Medicare, just interest. Inflation over the past 4 years, 23%. Source: Bureau of Labor Statistics, CPI data, 2022-2024. Your paycheck increases over the same period, 5.4% average. Source: BLS, Real Earnings, Summary, 2024, The Gap, devastating. Let's make this personal. Let's talk about your actual life. Groceries. A dozen eggs cost $1.50 in 2020. Today, $4.8. Source: USDA National Retail Report, 2020 for a gallon of milk, $3.10 then, $5.20 now. Ground beef jumped from $3.89 per pound to $6.45. That's not gradual inflation. That's currency debasement through the checkout lane. Rent. The median rent for a two-bedroom apartment hit $1,950 nationally in 2024. In 2020, $1,200, source Zillow Rental Index, 2024, that's a 62% increase in 4 years. Your salary didn't jump 62%. The pattern hits your mailbox every month. Savings. If you saved $10,000 in 2020, its purchasing power today equals $7,900. Source, CPI Inflation Calculator. 2024, you didn't spend a penny. You lost $2,100 anyway. That's the hidden tax of monetary expansion. Student debt, average monthly payment, $503. Median rent, $1,950. Add groceries, $450. Utilities, $150. Healthcare, $250. Transportation, $350. That's $3,653 per month minimum. Source, Federal Student Aid, 2024. Various census data. Median take-home pay for recent graduates, $3,100. Source, National Association of Colleges and Employers, 2024. The math doesn't work. It's not supposed to. Healthcare. Average annual insurance premium for family coverage hit $24,368 in 2024. Employers pay the most, but employees pay averaged $7,102. Source, Kaiser Family Foundation Annual Survey, 2024 in 2020. $4,980 employees share. Your coverage covers less, you pay more. Classic pattern. And here's the kicker about modern inflation. Your salary increase of 5% gets taxed. Your inflation loss of 23% doesn't get deducted. You're getting crushed from both sides. But technology will save us, right? Innovation. Remember cryptocurrency. Bitcoin promised freedom from central bank manipulation. No government could print more Bitcoin. Decentralized, revolutionary. It hit $69,000 in November 2021. Then came the crypto winter. Bitcoin dropped to $16,000 by November 2022. Source, CoinMarketCap historical data, a 77% collapse. Thousands lost their savings. FTX, the second largest exchange, collapsed in November 2022. $32 billion in customer funds vanished overnight. Source, FTX bankruptcy filing, November 2022, the founder got arrested. Customers got nothing. Different technology. Same human psychology. Same boom-bust cycle. History in blockchain form. Even artificial intelligence, the cutting edge of modern tech, can't solve basic economic cycles. Algorithmic trading manages trillions in assets. In May 2010, the flash crash wiped out $1 trillion in market value in minutes before recovering. Source, SEC Flash Crash Report. 2010 algorithms can't predict human panic. They amplify it. See the pattern? Rome thought the military might sustain them. Spain thought New World gold was infinite. Britain thought empire meant permanence. America thinks technology changes the rules. Every empire believes it's different. Every empire discovers it's not. So here's what nobody's saying out loud. China stopping their treasury purchases isn't just a policy shift. It's a signal. The same signal Persian merchants sent Rome. The same signal Italian bankers sent Spain. The same signal that preceded every currency crisis in recorded history. When your creditors walk away, you have 3 options. 1. Cut spending dramatically, political suicide. 2. Raise taxes massively, economic suicide. 3. Print more money, the historical choice. The choice that leads to the pattern repeating. The Federal Reserve's balance sheet expanded from $4.2 trillion in 2020 to $8.90 trillion by 2022. Source, Federal Reserve Statistical Release, 2024. They printed $4.7 trillion in 2 years. That money doesn't vanish. It dilutes every dollar in your wallet, every dollar in your savings account, every dollar in your future. And China watched this happen and said, "We're out. They're not alone." Japan has reduced holdings by $200 billion since their peak. Source, U.S. Treasury tick data, 2024. Saudi Arabia diversified into other currencies and assets. The collective foreign ownership of U.S. debt dropped from 34% to 24% of total debt. Source, Federal Reserve Economic Data, 2024. Question: if the biggest creditors are exiting, who's buying? Answer, the Federal Reserve, with printed money. creating currency to buy debt created by currency printing. The snake is eating its tail. But here's what terrifies economists who study history. Every time this pattern played out before, the ending came faster than anyone expected. Rome thought they had decades. They had 10 years. Spain thought New World gold would flow forever. It stopped. Britain maintained the gold standard until they couldn't. One day, the pattern doesn't announce its endpoint. It just arrived. 5 empires, 5 collapses. Same stages, same warnings, same ending. Each time separated by centuries. Each time scholars said, this time is different. Each time, the pattern proved them wrong. History doesn't repeat, but it echoes. And right now, the echo is deafening. Your grocery bill tells the story. Your rent increase writes a chapter. Your shrinking purchasing power fills the pages. The question isn't whether you're living through an economic pattern. The question is, what chapter are we on? Remember, 1923 Germany, the month before hyperinflation exploded, people thought things were stabilizing. Then came November. $1 equaled 4.2 trillion marks. Source: When Money Dies by Adam Ferguson. Teachers carried wheelbarrows of cash for bread. Life savings became worthless overnight. Remember 1997 Thailand. The week before the currency collapsed, government officials declared the baht stable. Then came July 2nd. 50% gone in 6 months. Remember 2008 Lehman Brothers. The day before bankruptcy, executives told employees everything was fine. September 15th, $639 billion in assets vanished. The pattern doesn't send engraved invitations. It just appears, usually on a Tuesday, usually when everyone's convinced it won't happen. And China stopped buying US debt. The signal everyone missed, because acknowledging it means acknowledging the pattern. Acknowledging the pattern means accepting we're not different, we're not special, we're not immune, we're just next in line. So here's what I can't stop thinking about. Are we the generation that breaks the cycle, or the generation that proves it unbreakable? Are we pattern aware enough to change course? Or are we like Rome, Spain, Britain, convinced our technology, our military, our reserve currency status makes us invincible? Every empire had a reason to believe they were different. Every empire was wrong. What makes us think we're the exception? So let me ask you this. When did you first notice things changing? Was it the grocery store when eggs hit $6? The gas pump when filling your tank cost $70? The rent increase that made you question whether you could stay? The credit card statement that never seems to decrease, no matter how much you pay? Drop a comment, tell me when you first felt it. Because here's what I'm learning. The people who see the pattern aren't economists or historians. They're teachers buying groceries, parents paying rent, workers watching their savings lose value. The pattern reveals itself in checkout lanes and mailboxes before it appears in textbooks. And here's my question for you. If history is a pattern, and we're watching it repeat, what's the one thing you're doing differently? Not financial advice, just awareness. What are you noticing that others aren't? Let me know below. I read every comment. If this made you think differently about money, about history, about the dollars in your wallet losing value while you listen to this hit, subscribe, because next week, we're going deeper. There's one decision that changes everything. One move no empire has ever made when faced with this pattern. One possibility that could break the cycle or prove it unbreakable. You won't want to miss it. Thank you for watching this through, for thinking with me, for seeing the pattern others ignore. If you want to understand where we're headed, subscribe. More patterns, more history. More truth that connects ancient empires to your household budget. I'll see you in the next one.